Welcome everyone to Vested Interests. This is Shane, and in today's video I'd like to cover 4 stocks to watch in February. As we turn the corner from January to February, it's important to keep our eye out for stocks that may be falling into fair value or undervalued territory, and when they do, to be able to have some capital set aside to pick up those shares at cheaper prices. So I wanted to cover 4 stocks that I believe are entering or have already entered that area, and you may want to watch these over the next 30 days or even longer. Actually, some of these I actually began to add to in the end of January here. Huntington Bank, for example, and Main Street Capital, I actually added 1 share to Lumen. I hope January was good to you in your portfolio. I know a lot of people are freaking out. I actually ended the month up a little bit, so it was a good month for me. But again, my philosophy is to buy undervalued stocks, and specifically in times like this, or just any time really, to pick up shares at below market value, and then if there's pullbacks, to increase the my share count in those. And which it does, it decreases my cost basis, increases my yield, and ultimately increases my returns, both in my dividend returns and share price appreciation whenever those stocks rebound. So I don't worry about pullbacks. It's actually a great time to look for undervalued stocks. So without wasting any more time, let's look at these 4 stocks that may be undervalued and a good time to buy. First up, we'll look at Huntington Ingalls Industries. Currently here, let me get the highlighter here. Huntington Ingalls Industry, ticker HII. At the close of business on Friday, it was $187.67. The 52-week range as low as $156.36, as high as $224.13. PE ratio of 11.26%, extremely low. Has a forward dividend payout for the year, $4.72 per share. Currently, its dividend yield is $2.50, and they do estimate a 1-year target price of $221.09, which speaks to their prediction for price appreciation. All this information is brought to you by Yahoo Finance if you want to look this up for yourself. And this may be one, like I said, with the 52-week range, the low of $156. You may want to watch it and see if it pulls back further. It's currently below my entry price, so I'll probably be adding to this whenever I have some additional funds around payday. I might even do so beforehand. I do have some cash sitting on the side. I think everyone should do that. Don't deploy all your cash at one time. I like to dollar cost average over time. Last week I entered the market at 3 different spots. So make sure you're keeping some powder dry to be able to jump on these costs. And you can see on Friday it did pull back a little bit on the day. These are the day ranges. So that is Huntington Ingalls Industry. It is in the industrial sector. So if you're looking for something in the industrial sector, this may be one to watch. They are a defense contractor. Next up, Main Street Capital, ticker MAIN. It did have a little bit of a rebound on Friday, but it ended the day at $42.98. Again, 52-week range, a low of $31.58, a high of $47.13. Again, may look for it to pull back closer to this 52-week low with everything else pulling back. If you can get it closer to that $31.58 low, that would be great. PE ratio of 9.28, extremely low. Forward dividend payment of $2.58 per share. It has a dividend yield of 6.03%. So this is what I was talking about at the beginning of the year. We're looking for companies currently that have higher dividend yields. So this would fit that bill. With a 6% dividend yield, this one would at least keep up or beat inflation at 2 to 3%, which is what we normally have. Currently, we're running a little hot. So that's why I'm looking for some higher yielding dividend stocks. Again, this is one that I'm going to be adding to. They also have a 1-year target of $44.25, which does speak to a little bit of price appreciation. But again, if you can get it closer, watch it over the next month, 60 days or whatever, and get it closer to this $31.58, that would give you better appreciation as far as stock price. But I'm not real focused on stock price. I never am. A good time during pullbacks, but the dividend yield and the dividend payment, that's really what we're looking for. Huntington Bankshares Incorporated, ticker HBAN. Again, it crept up a little bit, 0.8%. I was buying this last week as well. Dipped into it a couple of different times, picked up about 27 shares. And my cost basis, I picked it up at $15.30 in the beginning of the week and around $15.15 later in the week. So $15.18 is still in my buying range. 52-week range as low as $13.01, as high as $17.79. So again, if you can watch it and try to get it as close to this $13.01 low or even lower, if it does drop below that, that'd be ideal. PE ratio of 16.87. Banks, you really don't want to pay attention to the PE ratio. It's a decent indicator, but a better indicator for banks, which HBAN is a bank in the financial sector, is price to book. If you go to Yahoo Finance and look up HBAN and go to statistics here, you'll be able to see that price to book ratio. The forward dividend yield is 62 cents per share for the year. And again, another higher yielding dividend stock at 4.12%. And they do have a 1-year estimated target date of $17.78 per share. So again, speaks to some appreciation currently at $15.18. That would be a couple dollars per share in appreciation. Lumen Technologies is next on our list, and I believe last on our list. So this is the fourth company or stock that I would look at, ticker LUMN. Currently $12.14, or at least at the close of business on Friday. It did again have a little bit of a rebound, so you could have even got this cheaper during the day on Friday. It was up 2.19%. 52-week range, low of $11.09. Again, if you can get it closer to this, which you probably could have if you got it closer to this before it started to creep up a little bit, but you can see over the last 6 months it has come down. And as high as $15.45. I think I'm into it for somewhere in the $12 to $13 range. It has a PE ratio for some reason is not available. That's a little odd, but nothing to be worried about. Maybe look at another source to find that information. It has a forward dividend payment of $1 per share and another really high yielder at 8.42%. Lumen Technologies, ticker LUMN, is in the communications sector, and it actually has a 1-year target of $11.30, which may speak to it actually being overvalued. Again, this is just a metric to go by. Don't necessarily think it's the gospel. Do your own research, but $11.30. Again, if you can get it closer to this $11.09 low, they probably think it maybe is going to continue to pull back, because that's what it looks like here. It may be on a little bit of a downtrend. So again, look for this stock maybe to pull back below that $12 price, and then I would be comfortable adding it for this 8.42% yield, which would beat inflation, even the current inflation. Guys, if you appreciate content like this, if you like seeing what I'm looking at for the month, or like looking at dividend growth stocks, if you could hit the like button, share with someone you think that might enjoy the content or need the content. Drop me a comment below. Let me know what you think of these 4 stocks that I'm watching for the month and probably will be adding here over the next week or two. And if you haven't done so already, consider subscribing to the channel. I do try to put out at least a couple videos like this per week. I cover my most recent portfolio updates. I cover the stocks I'm watching, the stocks I'm buying for the week. And then my next video will be the stocks that have paid out dividends for the month of January. So I will cover those. We've got one more day. Obviously, you're getting this on the 31st of January. So when this day wraps up, what I'll do is I'll put together a video, all the stocks paid for the month. I've actually already started pulling that data out of my brokerage account, so you'll see what's paid out in January, what companies pay out in January, at least what's in my portfolio that pays out in January, and what those dividends look like. And that's what we're hopefully all looking for. That's what I'm looking for anyway. That passive income's in the form of dividends, so that one day I can retire, live off the dividends, make other investments off the dividends. That is the whole goal of this channel, to be hopefully an inspiration to you guys to start your own journey, whether that's in dividend growth stocks, whether that's in growth stocks in general that don't pay dividends. I don't prefer those because I don't want to have to sell the assets that I've accumulated to be able to make a profit. That's the only problem I have with regular growth stocks. You accumulate growth stocks and then you hope they go up, so that you can pay, or so that you can sell those growth stocks for a profit. But then you're stuck with just the profit, and what are you going to do with it? You're going to spend it, or are you going to reinvest it? To me, if I invest in dividend growth stocks, I'm not only going to get the appreciation, but I'm also going to get the dividend payouts quarterly, monthly, depending on what stocks they are, and I never have to sell those shares to get those dividend payouts. Most of the companies that I invest in continually are growing their dividend payouts, so my payouts will continue to grow over time, and the share prices typically continue to grow as well. Again, during times like this, you might have big pullbacks, which is a great time to add to your position. So with that said, guys, that's the end of this video. This is actually a picture I took the other day out back when the sun was coming up, getting up for work. Obviously, we've gotten some snow. I think it was fitting for the times we're in, a lot of volatility. The market may be entering a little bit of a winter time frame where things are slowing down. We're having some pullbacks. So again, maybe a great time to look at your portfolio, see what's undervalued if you really did your due diligence, understand the companies that you're investing in, understand the risks involved, the free cash flow that the company is producing, and their future outlook, and maybe even done a little bit of math to figure out what that discounted cash flow is. You should be comfortable in deploying additional capital in those areas where you have pullbacks, decreasing that cost basis, increasing those dividend payouts and future returns. And again, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you next time. Drop a comment in the comment section below if you guys like the video. Don't forget to subscribe, hit that notification bell, subscribe to the channel, and give me a thumbs up, or hey, if you didn't like it, thumbs down too. We'll see you in the next one, guys. Take care. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're uncomfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.